Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Welcome to our Bursa Malaysia Derivative webinar. Thank you so much for coming and spending your evening with us today. My name is Shane and I am the moderator for this webinar. Now, to ensure that you can hear us, I just want to do an audio check. So on your screen, there is a webinar control panel. If you can hear me, could you please click raise the hand button? All right, I'm seeing many hands now. Excellent. All right, you may put down your hands. Okay, well, we are doing this live now, and today we have an amazing turnout of webinar attendees, and we feel very encouraged. And our topic today is on futures trading plan. Now, over the past 3 webinars, we have talked about the basic of futures, the basic of derivative, and the basic of KLC. And today, we're going to put everything that we know into practice. Okay, and this webinar is approximately 90 minutes long, and then we will also end with a Q&A session at the end. Now, disclaimer, now the information for this webinar is only for educational purpose only, and in no way that Bursa give any buy or sell recommendation to any futures contract. So if you decide to long or short any contract, you do it at your own risk. Is that okay? Now, so we have a series of webinar arranged for you. This is an initiative under the Bursa Malaysia Derivatives. Marvelous initiative in my opinion. So we started with the basic of derivative, and we second topic talk about getting started in futures. Then last webinar we talked about understanding KLCI futures, and today we talk about future trading plan, and the subsequent 2 webinars talk about risk management and futures analysis. Now, this webinar is brought to you by Bursa Malaysia Derivative and managed by us, LifeChamp. Now, without further ado, let me introduce our amazing speaker today. If you have followed our webinar for the past few sessions, she also spoke for 3 webinars before, and she started her career as a futures dealer in AmFutures and subsequently promoted to become the head of futures dealing. And of course, she was responsible for all the marketing strategies for the futures trading strategies. Okay, and she subsequently headed the advisory division in eBroking in AmInvestment Bank. Of course, her role is to provide advisory services to client investing in equity and futures market. And now she is the CP speaker for SIDC and Asia Banking School, providing trading for many fund managers, research analysts, remisers, and futures brokers. And she is actually no stranger in the speaking industry because she's a frequent speaker in many seminars and conferences organized by many parties. And she's also a best-selling author for Jumpstart Your Stock and Futures Trading. Okay, now without further ado, let me pass it over to you, Ty'ng Ty'ng. Just hang on, yeah. Just give me a minute. Hey, are you having the control now, Ty'ng Ty'ng?
Oh no, I can't
Just
see.
Just give me a minute. I think I'm seeing your screen now. Am I
right? Can you see?
Yeah, I'm seeing your screen now.
So I can continue?
Yeah.
Okay. Hi, good evening, everyone, and thanks to Shane. Today's slides is a bit long, so on average, every minute I need to cover 1 slide. So I'm not going to waste any time. Let us directly start with today's session. Today's session, we are going to talk about futures trading plan, which is one of the most important elements in the whole futures trading. Now, today's session will be separated into 4 sessions. We start with session 1, settlement. There's part of it that we did not cover for the basic part, so we are going to continue for today. And second session, we are going to talk about what is trading plan, exactly what is trading plan and why. The third session is how to design your trading plan. We will kickstart, give you some ideas about how you design your own trading plan that is suitable for yourself. And we wrap up with session 4, how to execute your trading plan. Now, first session, settlement. Exactly what is settlement? Let me explain to you. Previously, I assume the majority of you already follow us throughout the webinar number 1 until number 4. This is already number 4, webinar 4. So I'm not going to cover anything that is basic. I'm going to go in details. Now, let's say previously, 5th of August, you bought one contract at 1,008, and 6th of August, you sold one contract at 1,816. Your calculation is you are taking 1,816 minus 1,008 times with Ringgit Malaysia 50. It comes to a profit of Ringgit Malaysia 800. This is the previous calculation for profit and loss calculation. Now, let us move slightly different today. What if on the last day, you did not close your position? What will happen to your contract? This is the common question that is being repeated asked for the past few webinars, which I'm going to cover today. Now, let's say on the last day itself, final day, and you did not do anything. Unlike stocks, you can hold forever. Future, technically, you can hold forever, but it's just that you need to have a minor things to do at the end of each month, which is you're going to roll over your position, what we call as you move your contract from current month just to the next month. That's it. It's a very minor technical issues to solve, which I'm going to cover now. Let's say 5th of August, you bought one contract at 1,008. On the last day, 30th of August, because 31st of August is a national day, definitely it's not a trading day. So the last day in Malaysia would definitely be a 30th of August. If you do nothing, what will happen to this buying contract, which you already bought at 1,008? If on 30th of August, you do nothing, you decided to do nothing, this will be the scenario. You will not have the price to calculate your final profit and loss. So how to calculate this final profit and loss? We need to discover a value or the price to calculate your final profit and loss. This all question mark is the price that you need to determine. Because previously, if you buy at 1,008, you sold it at, let's say, 1,816, you have the price for you to calculate. But the problem right now is, if you decided to hold until 30th of August and you do nothing, what will happen to your contract? And this value that we are going to calculate, what we mention as final settlement value, means that this price will give you or enable you to calculate your profit or losses. This is called final settlement value. Now, how to calculate these final settlement values? Let me walk through. Firstly, we go back to the contract spec. Remember, everything regarding to futures trading, we need to look at the contract specification. Now, look at the last two lines. The final trading day, it will be the last business day of the contract months. Like for example, in our example, August 30th will be the last business day. Then when it comes to final settlement, FKR will be a cash settlement based on the final settlement value. Look at this word called final settlement value, which we are going to find out how to calculate this final settlement value. Now, if you read through the contract specification, this is a very lengthy explanation of how to calculate. But I believe majority of you, when you read it, you will never understand exactly how they are going to calculate. I'm going to walk through with you. For example, do you all notice that FBM KLCI, we have an index, this is called as FBM KLCI. Now, the circle which highlighted that is 1755.32, this is your FBM KLCI. Now, the question is, do you all know how frequent is this FBM KLCI change? That means how frequent. This FBM KLCI is based on the 30 index members. They calculate the average market cap. How frequent they calculate, and this index will be reflected. I believe majority of you might not know. In Malaysia, these figures change every 15 seconds. That means every 15 seconds, they would tabulate the 30 index members based on their market cap, and they weighted it out. Then it will be reflected at the FBM KLCI. Now, once you understand, this is based on every 15 seconds, they will calculate once. Means that every 15 seconds, this FBM KLCI will change once. For example, at this moment, it's 1755.32. 15 seconds after that, it will be 1755 point maybe 01. Then another 15 seconds after that, it might be 1754.35, etc. Now, how to calculate it? If you really read from the contract specification, there are a few important wordings to highlight. First, average values. That means you take the total figures, you divided that the numbers of prices. This is your average values. Second important point is every 15 seconds. Every 15 seconds, you take this FBM KLCI and calculate it. The next important point is you calculate from 3 o'clock, 3:45, 30 seconds on the last day itself to 4:45, 15 seconds on the last day based on FBM KLCI. That means on the last day itself, let's say on 30th of August, from 3:45, 30 seconds, you start to calculate the FBM KLCI. Plus one last value at 5 p.m. After the market close at 5 p.m., there's another one values. You take into consideration of that, then you minus out the 3 highest level and 3 lowest level, which is what we call it as outliers or extreme values. Then you divide it by, if I'm not mistaken, from 3:45, 30 seconds to 4:45, 15 seconds plus 5 o'clock, total value is 251 ticks. That means there are 251 prices. You take these, you minus off the 3 highest and 3 lowest, it remains 246. You just divide it by 246. I show you how to calculate. For example, 3 o'clock, 3:45, 30 seconds, the price for the index is 1801.35. 3:45, 45 seconds, the price is 1801.28. 3:46, the price is 1802.02. Then the price continue every 15 seconds until 4:45, 15 seconds. Let's say the FBM KLCI is 1800.09. Then 5 o'clock when your FBM KLCI closed, there's another tick at 1800.89. Normally 4:50 and 5 o'clock, the price will be the same. Now from there, total, you take it to average it out. So total value is, you minus out the 3 highest and 3 lowest, you have 235 prices, which means that 235 index. You just tabulate this and divide it by 235. That will be your settlement value. I repeat, these figures will be your settlement value. Let's assume when we tabulate this and divide it by 235, it comes to 1804, let's say. So what will happen is, if you decided to do nothing on 30th of August, this contract itself, for the final settlement value, we will be taken to calculate at 1804. That means on the last day, if you decided to do nothing, the settlement value is at 1804, your contract will be auto closed at 1804. I repeat, your contract will be auto closed at 1804. So you take 1804 minus 1008 times Ringgit Malaysia 50, you have a profit of 200 Ringgit Malaysia. That's it. Now, do you notice that this final settlement values is very difficult to calculate? Now, I teach you a way to calculate. You don't need to calculate by yourself, and it's very simple for you. This all calculation is meant for brokers, institutional clients, or big traders only. They wanted to profit based on the small prices or small differences, they will calculate. But as a retail investor, you don't need to calculate this. Now, I give you a very shortcut way to get these figures, 1804. How do you get it? Now, on the last day itself, if you look at this chart, this price feed, exactly on the last day, 31st of March, you just ignore the year. For example, if on the 31st of March, on the last day itself, the prices, do you notice that the buy and sell itself is very huge? The buying, the queuing quantity and the queuing selling quantity. Normally in Malaysia, FKI on average, Daily basis is only double digit. That means you will see between 10 contracts to 99 contracts. Very hard for you to see anything that buying or queuing quantity will be exceeded double digit. So, but on the last day, can you see that it's basically a triple digit? This is because those institutional clients or big retail traders, they are trading. Now, they are trying to make some money through small differences. Now, basically, can you see that the prices at 407, this is the clock. At 407, the prices, the buyer and the seller is at 30.5 to 31. Means what? Based on the calculation, up to 4 o'clock 07 minutes, the prices is expected to settle at 30.5 or 31. I repeat, the prices is expected to settle at 1830.5 or 1831. You don't need to calculate by yourself because the market will reflect exactly what is the average at per that particular time. So this will make your life very simple. You don't need to calculate by yourself, and it's very difficult for you to calculate by yourself because unlike institutional clients, they already have formulated Excel spreadsheet for them and also the direct data, real-time data to be pumped into the Excel spreadsheet. So this is not meant for retail clients. Now, can you see at 5 o'clock, this is the clock. At 5 o'clock, 5:01:59, the buyer and the seller is at 30.5 and 31. Can you see that? So basically from there, you will know that the market basically closed at 30.5 or 31. It's only a difference of 0.5 points. So it's about $25 of difference. So you can assume that your contract will be settled at 1830.5 or 1831. No issue. So this is one of the way you don't need to calculate by yourself, but you get to know what is the settlement price. Now, there's another even faster way. You don't need to look at the screen itself. You just give a call to your brokers. Ask them, what is the settlement value? I'm very serious. You just need to give them a call at 5 o'clock and ask them what is the settlement value. They already calculated. You check with them. That's it. Or at night, your statement will be reflected that particular price. So I repeat, if you don't do anything by the last trading day itself, your contract will be auto-settled. Now, when it comes to expiration, look at this. This is August 15, 2015. You can see on August itself, spot month is August. Next month is September. You can see that August month is available. So this August month will be available until the last trading days, which is on 30th of August. Subsequently, can you see, when it comes to 1st of September, this is 1st of September, your August month no longer available. You can only see September month itself. So if you don't do anything as per previous explanation, your contract will be auto-settled. You do not have any position in hand, no more. So if you decided to do something, September, you continue to buy something in September. Now, rollover, this is the terms we use for you to roll over your position. Means what? If on August, let's say 5th of August, you bought one contract at 1,008. And on 30th of August, you still remain bullish towards FBM KLCI. Means what? You still decided to hold this long contract because you believe that the market will still go higher. So what should you do? Because last day, if you don't close, the market will auto settle your position and you no longer have a position. So my question to you is, if you decided to remain, how are you going to remain an open position on 1st of September? This is what we call as rollover. Means rollover as a layman terms means that you from one contract month, you just push it or move it to the next month. That's it. You move it to the next month, what we call it as rollover. Now, rollover, there are three methods. generally there are 3 methods for you to roll. But today, I'm only going to cover one method, which is we call it as lagging. Because once you understand lagging, remaining auto cash settle and spread, automatically you will understand how to do. Now, as I mentioned to you, spread, you can use it for rollover, you can use it to do trading as well. But I have been reiterated a few times, personally, I don't encourage retail investor to go with spread trading, especially beginners. The reason behind is spread trading involves a lot of news and fundamental, which normal retail investor lack of it. Because the spread, you really require this all information to be able to make profit. Now, come back to this topic. There are 3 methods to roll over. We name it as lagging, auto cash settle, and spread. Now, today I'm going to cover lagging only. Lagging is very simple for you to understand. Now, I'll give you a scenario. 5th of August, you bought one contract at 1,008. On 30th of August, what will happen? Look at this table itself. Now, your one contract buying will translate into +1. Remember, in futures trading, +1 means buy. -1 means short. +1 means long one contract and -1 means short one contracts. Now, it's very simple. Initial position, you have +1 contracts. Now, at the end of the month, on 30th of August, because your 30th of August, your August contract will expire. So your net position in hand definitely need to come to 0. You should not have any position. Now, this is a mathematics for you to do. So what should be the buy or sell for your August contract? Initially, you have long one contracts. At the end, you need to have 0 contract in your position, in your hand. So by mathematical perspective, this should be -1. -1 means what? You should short 1 so that your August contract will be auto close. I repeat, your initial position is +1. Now you need to short 1 so that your net position in hand will be 0. So at the end of September, you want to have +1. Remember, you still want to continue to hold your position by September itself. So your September, you need to have +1, means that you need to have long one contract in hand. So by mathematics, 0, you should be +1, then your net position will be +1. Means what? Your September contract, you need to buy 1. I repeat. So at the end of this, the summary will be this. The summary is you need to sell 1 August FKLI so that you will close your one buying contract at 1,008 and you buy 1 September contract of FKLI. So the results will be, your final conclusion will be 1st of September. Your open position will be 1 long FKLI. I believe you all can understand, very simple only. You just close the August, then you buy into September. That's it, as simple as that. Now, August, you have long one contract. September, at the end, you move it over to September. So eventually, your September will have 1 contract because your August will be closed and eventually you only have left with 1 September contract. So it will be the same. So this is the only method that I'm going to cover for you. So generally, for you to buy to sell 1 August and buy 1 September contract, you do it at the same time. Means what? You sell it in the you sell 1 contract of August for FKI. Once you sold it, immediately you go to September and buy 1 contract. That's it. Now, let's move into trading plan. This is the most important topics to cover for futures trading. Trust me, trading plan is more important than any other things. I will reiterate later and I will give you the reason why it is so important. Now, to become a successful futures trader, I need to give you a vision. How to become a successful futures trader. give you 10 seconds, think about it. Which one is more important? Whether it's analysis, factual news. To me, I don't even cover those news. News, we can divide it into factual news and those what we call as speculative news. That means certain opinions, certain prediction, certain analysis. Factual news means that already happened. For example, the GDP, they are going to announce. Once they announce, this is what we call as factual news. For example, CPO, they have certain of their production news. Once they announce, this is a factual news. We don't cover opinion news. That means, for example, if let's say we do a market outlook, we predicted that the market is going to go higher. This all is totally out of the scope and it's not something for you to take into consideration as well. Now, first is analysis, regardless whether it's technical analysis or fundamental analysis. Second is factual news. Third is trading plan. And the final one is trading mindset. I give you 10 seconds, think of it. If you want to become a successful futures trader, which one you think that is more important? Now, I believe majority of you already have your own answer. Now, let us look through. Frankly speaking, based on so many years in the futures market, number 3 and number 4, which is your trading plan and trading mindset, they are the most important criteria. I can say easily for trading plan and trading mindset, for you to success, they take at least 80% and above for you to success to become a successful futures trader. It is not analysis. It's not your technical analysis nor your fundamental analysis. I repeat, it is trading plan and your trading mindset will determine whether you will become a successful futures trader. Now, I'll give you an example. There are many scenarios. Like this kind of charts, frankly speaking, based on your charting software, etc., it's very difficult for you to trade. This all, your trading plan will determine whether you will be successful or not, or your trading mindset, both of it. Your analysis will only assist you at the entry level. Basically, will only assist you at the entry level. At the end of the day, technical and fundamental is still in a way a prediction. And you understand one thing is futures, the movement is a bit higher, means that it's more volatile compared to the rest of the instruments in the market. There's a reason why when it comes to futures trading, you should prioritize trading plan and also your trading mindset. There's a reason why we allocate one topic for trading plan itself. Now, to become a successful futures trader, this is the ladder. You start from the bottom. Now, the first step, definitely you need to get started first. If you keep on attending classes, but you never go and trade, you will never achieve your goal. So first, for you to get started is very important. Learn, then only you start. I always give people advice. Futures, if you don't attend class, you don't learn, never start to trade. Because actually any of the products or any of the instruments in the trading world or investment world is the same thing. Because sooner or later, you are going to burn your money if you don't learn properly before you go and trade. Second steps, you need to do your analysis. It doesn't matter coming from fundamental or technical analysis. Then the third important part will be your trading plan. Then start to make your trading plan. Then you follow your trading plan to trade. And subsequently, you need to go in tandem with your trading mindset. Correct trading mindset is very important. Then only you will become a profitable trader. This is a vision for you to follow. I repeat, you get started, then you do your analysis, learn how to do your analysis. Analysis is only take about 10 to 20% of it. Then you need to focus a lot in terms of your trading plan, sell your trading plans. Then you have a correct trading mindset. You will become a profitable trader. Now, what is exactly a trading plan? Some of you may call it as a trading system. Regardless, for me, some of you even call it as a trading rules. But to me, trading plan, you can call it as anything as you like. It's just a plan. Now, it is generally a complete set of rules. You need to determine your rules that you need to follow. I will explain in details later. Then trading plan for any successful traders, it is a must. You must have one exactly. If you trade without a trading plan, I cannot guarantee you anything, but I can guarantee you that if you trade without a trading plan, you will not be successful. Now, as a layman terms, what is exactly a trading plan? Look at this map. For example, if you decided to travel from Penang to KL by driving, do you need to have a plan or not? Definitely, you need to understand many things before you can go with it. If not, for example, there's a chances that your car break down, there's a chances that you cannot reach your destination, there's a chances that you lost your way. Maybe from Penang, you drive all the way to Kedah, to Perlis, etc., or even to Kelantan or Terengganu. You did not end up at Kuala Lumpur. Now, ultimate goal of trading plan is two things only. Generally, for any trading, it falls into two very important points, which is how to maximize your profit and how to minimize your losses. Now, maximize your profit and minimize your losses, there are two different areas. I'll highlight in details later. So this is your ultimate goal, to set up your own trading plan. Now, what is the benefit to have a trading plan? Before you really understand how to set up your trading plan, first, if you have a trading plan, you will prevent irrational decisions. That means whenever you trade, you don't go with your emotion. Many of us, when we do our trading, without a trading plan, you tend to follow your gut feelings, your emotion to trade. Second, with your trading plan, you will be more disciplined because it is a set of rules. They already govern you. Like, for example, in Malaysia, they will tell you that if you want to drive on the road, you must buckle your seatbelt, you must follow the traffic lights, etc. So with that, you will have a discipline. You just imagine if our Malaysia without a set of rules, what will happen to Malaysia? That's why rules will limit your ability, will limit your things that you can do or cannot do. So discipline will come in. Third, you will be relaxed and stress-free in a way. You will be more relaxed because you just follow your trading plan, you just execute accordingly. You are like a bit like robot. I always tell people when it comes to trading, if you can treat yourself as a robot, that will be the best. That means you put in your trades without any hesitation. You don't treat your money as money part of it. You just treat it as a point, etc. That it will be easier. Next, monitor progress. It will help you to monitor your progress because your trading plan will encompass your evaluation and your solution, and you will write down exactly what you have done. Because many of us, when we trade, if you follow whatever your emotion, etc., you tend not to list down all your trades and you do not know what is exactly happens. So this will help you to monitor your progress. And the final part will be definitely to reduce bad trades. This translates to increase your profit. Now, when it comes to design of trading plan, to be honest, is a very, very huge topic. Personally, when I cover trading plans, I cover for 2 days course. But today, because of the limited in times, trading plan itself, I do it in a more summarized version for you. But this will enable you to kickstart your whole trading plan. Now, how to design your own trading plans? There are 4 important elements in trading plans. Actually, for elements itself, for trading plan itself, there are more than 10. But I try to summarize so that you can easily get started. Now, 4 elements for your trading plan. Firstly is you need to design yourself. Yourself is very important. I will explain later why yourself is so important. Second one will be your entry level. How to design your whole trading plan for your entry level. And by the time that you enter your trades, you should know your exit level as well. I repeat, by the time before you enter any trades, these 4 things need to be defined. Yourself, entry level, exit level, risk, and money management itself. 4 items need to be in place before you execute any of your trades. Without any of your trading plans, you should not execute any orders. Now, to design your trading plans, I give you a layman terms. For example, if you are going to travel or driving from Penang to KL itself means what? For example, you need to understand whether you yourself, can you drive that long distance or not. If you cannot drive and you insisted to drive, there's a possibility that you ended at Para, you're already very tired and you cannot continue your journey, and there's no way for you to reach Kuala Lumpur. So if you decided that you cannot drive by yourself, you need to have a person to accompany you throughout the journey. So you need to understand yourself itself. Second, for example, you need to understand whether you drive better in the morning or in the evening or at night, and whether the traffic itself is it good or not. So many things you need to understand so that you can plan your whole driving trip. Now, second thing for entry level as a layman terms means that you need to understand. For example, if you're going to drive in the morning, will the traffic very bad or not? If the traffic is very bad, you should not drive at that time. For example, if you are driving during Raya itself, then you are going to stuck for the jam. Normal journey is about 4.5 hours. You might be ended up 10 hours only. You can't even reach your destination. So let's say if you have a meeting at 8 o'clock and you start to drive at 3 o'clock in the afternoon, definitely you cannot meet your time to attend the meeting itself. So you need to understand whether is it comfortable or not. That's the time. Is it the correct place to go with it or not? And when you exit, is it the correct toast for you to head to Kuala Lumpur, or you are ended up going towards the Kedah itself? You need to identify yourself. Now, the third part is your exit level. Means that you need to know by the time that you go into KL, which toll that you need to exit, and exactly which toll that you need to exit for you to head into KL. If not, you're going to drive all the way to Johor. So you need to plan accordingly. And whether throughout this journey itself, you have sufficient things for you to do or not, and you are able to drive with during the whole journey. Last part is your risk and money management. For example, risk management is like whether you have sufficient petrol, and whether you have a good check for your cars itself or not, whether your cars can drive all the way from Penang to KL. You know, some of the old cars, if you drive so long, the journey itself, maybe the water will boil itself, then you cannot continue your journey. So you need to understand. Next, your money management is like, for example, if you're going to pump petrol, how much you need to prepare. If you're going to stop at the pit stop itself or the rest areas, do you have sufficient money to pay? Do you have sufficient money to pay for all your tolls, etc.? So these are some of the layman example. So now we are going to move into the actual example of a trading plan. So I hope that you can understand when I give a layman explanation. Now, move into the actual trading plan. When it comes to the actual trading plan, when we define yourself, this is some of the examples that you can look at it. Some of the example. For example, yourself, you need to define your own objective. Certain people, their primary objective and secondary objective. Now, personally, my advice to you is you should have at least more than one objective, because normally primary objective for most of people is to make money. I would say that near to 100% of you, your primary objective is to make money. If not, there's no point for you to trade. But secondary objective is very important, because if only looking at the money, it will not help you to sustain in the market itself. I repeat, if purely based on money, that's your only objective to do trading, it's very difficult for you to sustain in the market. Because when you face with any issues, you do not know how to solve it. Or you face with any difficulty, you tend to give up. If you have a secondary objective, like for example, you like to trade because you really love trading itself, then you have the desire to trade, you are very passionate towards that, then it will help you. Because when you face with any difficulty, you will find a solution. So objective, you must go with primary and secondary objective. I already give you two examples. Throughout my presentation, every part, I will give you two examples. So it will provide as a guidelines for you to design your own trading plans. Second part about yourself, you need to determine the markets that you are going to trade. For example, Malaysia or Singapore, or Malaysia or US. Like for example, personally, I don't trade any US market, because at night, as you all understand, I tend to sleep at 9:30. So by the time 9:30 already sleep, US market, that they don't even start their trading session. So it's very difficult for me to trade. And for me, I'm very awake in the morning. But for me, after 7 o'clock at night, I cannot think well. There's a reason why, personally, I don't trade anything out of Asia times. Now, the third thing is you need to identify the products for you to trade. For example, whether you are going for FKI or FCPO, some of the decision that you need to make, for example, FKI, the volatility is not that high. FCPO, the volatility is higher. These are the examples that you need to think. Whether are you suitable or not? Your attitude, your characters, your upbringing, is it suitable to go for FKI or FCPO? Your money, your capital, is it suitable for which products? The trend itself, whether is it uptrend or is a sideways trend. For example, if it's a sideways trend, you can go with FKI. This might be the time for you to go with FCPO, or you are going for other markets as well. Now, another part for you to take into consideration is time frame, whether you are going for short term or long term. Now, I need to reiterate one thing. Definition for futures trading itself, short term is meant for intraday. We define it generally in futures market. Short term we define as intraday trading. Means that today we buy, today we close the position before the market close. Now, for long-term trading is something more towards more than a month. For intermediate trading, for medium-term trading means that it's within a week. That is for medium-term trading. So it's a bit different from the rest of the investment products. So you need to identify whether you are more suitable for short-term trading or long-term trading. For example, if you tend to work, you're working during the daytime, you cannot monitor the market, then short-term trading, definitely it should not be something that you are looking at it. So you should go for a bit long-term trading. That means you are holding a position for overnight. Because overnight, to be honest, in Malaysia futures market, overnight it tends to have more profit in a way. Personally, I don't encourage people to go for short-term trading. So even you are working, you are entitled to go for long-term trading. So this is about yourself. There are many things that you need to define yourself. I only cut to 4 because today the time is a bit limited. So I give you an example, at least you kickstart 4 of the areas to define yourself when you design your own trading plan. Now, when it comes to entry level, entry level, you need to look at it. For example, the product, whether currently there's any entry level or not. Based on FKLI, when will you execute your orders? When the market break above your moving average 200 days? For SCPO, when will you enter the market? For example, when the MACD cross, or any example that you already set your criteria based on your own criteria to execute FKI and FCPO. Because FKI and FCPO, the entry level, their criteria to set or your strategies might be different. So you can base on that to select the entry levels for respective different products. Second, the trend. Is it an uptrend or is it a downtrend? You're going to long only or you're going to short only. Certain people or certain traders, they only look at one side. For example, certain of the traders for FKI, they only trade when it is an obvious downtrend. During uptrend, they don't trade. So different people, they have different ways to design their trading plan. Now, when it comes to stop loss, whether you are going to put a 10 points to cut loss, 20 points, 1% of your capital, or Ringgit Malaysia 500s. It depends on individuals. So you need to identify clearly when you are going to cut your position. Because at the point that you enter, you should know that your stop loss. Because your stop loss will determine your risk and reward ratio, which is the last part. Actually, entry levels, there are also many other things that you need to look at it. But as I mentioned, I just do a summary version so that you can kickstart your own trading plan. These are more sufficient for you to kickstart your whole trading plan. Now, risk and reward ratio, when you calculate it, you need to base on your entry level and also your stop loss level to calculate your risk and reward ratio. Because your risk and reward ratio will determine whether this particular trade, is it good for you to enter or not. For example, normally if your risk is 1 and your reward is only 1, normally we don't do. For example, if you're going to risk $50 and your profit is going to have only $50, we don't do. For futures, to be honest, at least you must do 1 to 2 and above. Then only you can do that. This is one of the examples that you can set up in your own Excel spreadsheet or your own trading flow or your own the whole flows, because there are many ways for you to set up your trading plans. This is the easiest way, your Excel spreadsheet. Now, for example, you have your date of open, your products, then your contract months, then your long and short contracts, your entry price, your reason. Remember, reason is very important. Before you enter, you need to give a reason why you decided to execute these particular trades. Did it hit the reason or the trading plans that you already mentioned, your strategies that you already mentioned or determined? Did it hit or not? The reason for you to enter. If not, you tend to follow emotion to trade. I repeat, you need to define this all. So this is one of the Excel spreadsheet that you can go after. Now, when you Google type in the website, you can see there are many Excel spreadsheets free available for you to access. So you can download any of it, then you actually modify a bit. It will suit your own trading plan. Now, once you modify it, eventually you tend to add more and more columns as per your own needs. So start with something simple. This is the simplest version that you can ever go. Then you need to calculate your risk and reward ratio. For example, your stop loss, how many points you decided to do. Once you calculate, you key in these figures, they will calculate your expected maximum losses, then your target price, then they will calculate your risk and reward. Based on that, then you can make a decision whether you should buy or should you sell or should you do nothing. So these are some things that to guide you through your entry level. Now, when it comes to exit level, the same thing. Exit level, we prioritize two things only. Two things. Either you are making money, that means you're running a profit, then you need to exit. You need to close a position by profit taking. Or another way is when you enter the market go against you. You are suffering losses, whether should you cut loss or not. These are the exit level that you need to preset. I repeat, many of you, when you enter the market, then you let the market make your decision where to exit. This is not the correct way. You must have your entry level, exit level, your money management, yourself in place before you execute any orders. You should not let the market determine where is your exit levels. Many of you likes to, when you buy a trade or sell a contract, that only you say, oh, I look at the market, that only I decide what is my cut loss point. If you wait until that levels, trust me, your winning position or your losing position, that they are all emotional. It will not be a sustainable one and you will not get your consistent return. So for example, your winning trades, whether 20 points to take a profit, or you are using a trailing stops to adjust your profit, to maximize your profit, or you use when you are suffering losing trades, 10 points to cut loss, or how is it, or your cut loss position. So these are some things that you need to determine before you enter the market. I repeat, it's before you enter the market. I give you an example for the Excel spreadsheet that you can design by yourself, or either anything or in your Google Words or whatever. Excel spreadsheet is normally easier because you can formulate your formulas, everything. That means everything is auto-calculated by yourself, by itself, so that it's easy for you. You just need to key in 1 to 2 figures. The rest they will generate for you. You just need to look at it. For example, they will auto-calculate your unrealized, your exit point, date, price, number of contract, your second exit level, then your third exit level, if there is, then your holding period, how long you hold, because normally we will calculate how long we hold a position and how long we need to hold to realize a profit or a losses. This all you need to calculate because there's a cost towards that. Then your realized point value, then your evaluation. Now, evaluation is very important. I will cover the later stage. So this is one of your exit example. Now, when it comes to the last part, which is the risk and money management. Now, I'm not going to go in details in terms of the risk management because the next topic will totally cover in details about risk management. When it comes to elements of trading plans, risk and money management takes a very big chunk as well. Now, risk and money management is something that you need to look into it because they will determine many things. Trading plan is very important, especially comes to this last part, which is the risk and money management. Some of the example. Now, I need to highlight the difference between risk and money management. Many of the traders, they will mix two together. Actually, there are two different things. When you look at risk management, you are looking from the point of how to minimize your losses. That means your stop loss orders, etc., how to set it. So risk management is more towards the angle of minimizing your losses. But when it comes to money management, we are coming from the point of view of how to maximize your profit. So when it comes to money, maximize profit means that you're looking, for example, your trailing stop, etc. How you move your stops so that you can maximize your profit. So two areas that we need to look into it, which is the risk and money management. Now, some of the examples that you can look into it, like for example, your risk management will be your stop loss point, your risk and reward ratio, etc. And your money management will be your trailing stop, your position sizing. For example, how many positions when you go for your first entry level, when it comes to the second entry level, how many positions, when you take profit, how many levels you need to take profit. This is all your position sizing. Now, as I mentioned, trading plan is a very huge topic because even like position sizing itself is a very big topic. But anyhow, today is enough for you to kickstart. When you cover this all, that means if you understand the 4 elements for the trading plan yourself, you define it, you design it, your entry level, exit level, risk and money management, you will be fine. That means your trading plan is about 60 to 80% perfect. Subsequently, once you start to trade, some of your experience you will put into it. That's it. Okay. Now, I give you some of the samples that I directly screenshot from the website. The simplest one, you can see that they only put it in a word format. Can you see or not? It's a word format for the whole trading plan. They only put it in a word format, then they define this all word format itself. So you can start with a more simple way. That means you take one A4 size, you just start to write down what is your selection based on just now whatever I already covered for you, because this is even more simple. So you select your market, you select your products, how to define your time frame, how to know when you are going to enter based on what kind of criteria, based on what kind of technical indicators, etc., based on what kind of news. So these are one of the simplest method to go. Some of the more comprehensive or more complicated one will be something like the flow chart. And when I cut for this, for the tradingwithpriceaction.com, this is only part of it. That means this is maybe the execution part, the entry levels. You just imagine if you have yourself defined in this kind of format, then your entry level, your exit level, that means you have four this kind of flows in place. You never see ours. Ours were even more complicated. But personally, as a beginners, I would encourage you to go with this type will do. That means you start to set out in Excel spreadsheet or in words will do. You don't need to go with this kind of flows. Okay. Now, once you decide already, the most important thing is to test the water. Now, how to test the water? What I'm trying to highlight in this way. Once you decide, you need to know whether it works or not. You go and test it with small sum of money. Just imagine, today you are going to take a bath. You start to turn on your water heater. And this is the first time you're going to use the water heater. Do you directly walk into under the shower? Definitely no. Because if you directly walk under the shower, you might get burnt because the water might be too hot. So what you need to do is, maybe you test with your hand or test with your feet first. Then only once the water temperature suits you, then only you start to take your shower. The same thing when it comes to trading, you already design your plan. Before you execute it in a mass way, that means you do in a more contracts or in a huge capital, you start and test it with small sum. My personal advice to you is try not to do any paper trading. No point, because when you do paper trading, there's no emotion involved, and you will see that most of the time your trading plan works because there is no emotion involved, there's no psychology involved. So personally, I would encourage you directly to use your money, because when you come up with your trading strategies, you're already back tested. So you can directly use a small sum of money, go to the market and test it. Many of you, you'll notice that even you test with paper trading and your strategy work well. But once you started, you will see that there's like a shock, a culture shock, because during your testing, your paper trading, you tend to make a lot of money. But once you start in the actual trading, you tend to lose money, because there's another elements what we call as trading mindset, your psychology. So my personal advice is no point for you to test with paper trading, provided you just want to understand the product. If you're going to test the strategies, just go directly to the actual market, test it with small sum of money. That's why when you grow bigger, your capital grow bigger, you allocate a sum of money, a small sum of money for you to do your testing of strategies. Now, when it comes to session 4, execute your trading plan. Executing is very important. This is one of the ways. That means it's like your Garmin, your Waze. There's a direction to lead you from Penang to KL. Now, if you exit at the wrong exit, what should you do? You just make a U-turn, then you continue your journey. If you don't make a U-turn and you insisted to continue with the journey, so it will be you ended up, instead of going from Penang to KL, there's a chances that you're going from Penang to Kedah, the same thing. So along the way, you need to modify a bit, you need to rectify a bit, you need to do your evaluations, then you rectify, then only you continue with your execution of a plan. That's why monitoring is very important. Follow your trading plans. The trading plans serve as your ways, like your way. They will guide you through your journey. If you exit the wrong place, make a U-turn, come back to the actual direction. Don't continue to drive. Now, when you execute your trading plan, one part of it, what we call it as evaluation. I reiterate, this evaluation is very important. Now, you need to write down for this particular trade. For example, for the first trading, you bought 5 contracts, then you close at the losses, for example, 1,000 ringgit Malaysia. Now, once you calculate this all, at the last column, you need to write down what is the problem so that you suffered, what is the problem that contribute to you to suffer the ringgit Malaysia 1,000. Now, I'm not asking you to write an essay. I'm just asking you to write a bullet point form. That means a few points. For example, I did not follow my trading plan. So if you already written down that you did not follow your trading plans, then you should know what is the next solution. Then you should remind yourself, I should not, in future, whenever I execute any orders, I need to follow my trading plan as per defined. So you need to know your solution. Now, this evaluation, once you stated down or once you written down, it is not meant for you to keep. Every week, you need to come in and revisit all your problems. This evaluation is all your problems and your solution. Because when you revisit, it will remind you, oh, don't make the same mistake again. When you reread, when you revisit, it will remind you again, oh, please don't do this kind of silly errors again. So this is the way for you to make sure that you go according to your trading plan and you modify your trading plan so that your next trade will be a better one. So it's very important for you to monitor this all. Don't get your money burned without you do not know any reason. Means that you don't simply burn your money and at the end of the day, you still keep on burning your money and you do not know what is happening. Many of the people in the market, they have this issue. They keep on trading, keep on losing money, and they keep on continue to trade. But they do not know what is happening, and they do not want to find out as well. So it's very important for you to have this evaluation and also your solution. Now, this is very important. Keep calm and focus on your trade plan. I just want to highlight one thing. Some of the traders in the market would say that, oh, you asked me to come up with a trading plan, so I come out. But at the end of the day, they already come up with the trading plan, but they never follow their trading plan. And they never focus to follow their trading plan as well. It's very important for you to keep on taking out your trading plan, follow your trading plan, and remind yourself. Now, the initial stage is a bit tough. You know why? Because you just set out. It did not go into your mind yet. But once you continue to trade and you continue to use into it, automatically it will come into your mind. For example, nowadays when you drive, automatically you know that you need to buckle your seatbelt, you need to follow the traffic lights, you need to have your signals, etc. You need to have the lights on at night. This all initial driving stage you might forget because you need to still refer back to the rules. But once you are used to it, it will come in automatically. So give it a habit, take it as inculcate the habit and come up with your trading plans, then just follow your trading plan. Now, before we end, because slightly exceeded the time, I just want to highlight 3 key takeaway points for you to remember. Now, today we covered 3 parts, very important. One is before your contract expired, what should you do? One, you can choose to close a position, or you just let it auto expire. That means they will auto calculate for you, then you will close the position. Or another way is for you to just roll over. That means you move from August contract, you just move it to September contracts. Now, the second key takeaway point is there are 4 important elements to set up your trading plans. Just remember these 4 elements. Don't go for something very complicated, which we have more than 10 elements. You just focus on these 4 elements, at least to kick you start. Now, these 4 elements for you to set up your trading plans so that the 4 elements, important one is yourself. You need to know how to enter. You need to know how to exit, when to exit, etc. You need to know your risk and money management. So these are the 4 important elements. And the last important key takeaway points to go in tandem with this trading plan is just plan your trade and trade your plan. Because many of the traders, they have the plan in place, but once the market moves, they tend to be diversified. And in a way, they being diversified or being distracted, and they tend to move out from their trading plan. So plan your trade and focus on your trading plan and follow your trading plans to execute your orders. For example, if your stop loss, you already mentioned that it's 10 points. If the price did not hit, don't, because of the market movement, you just go and take. Or if the market move higher already, is still yet to hit your trailing stop, don't get out from the market, continue to make profit. Because you will come to a point that, for example, first time you make a 10,000, you are so happy. But you know that follow your trading plans, the market is going to move higher. But because of your emotion, you tend to close your position too early. In a way, it's like a premature profit. So just plan your trade and trade your plan. And this why I highlight that is so important is if you always remind yourself, plan your trade and trade your plan, trust me, your trading in futures will not face with a lot of issues. That means normally you will tend to make money throughout your whole futures trading. I just want to highlight, just give me 30 seconds to do something about this Bursa Malaysia workshop, because for webinars, we only have 1 hour. So it's tends to be more limited times. So Bursa Malaysia actually have a Bursa Malaysia workshop, what we call it as BMW series, that we cover futures itself. And for this futures workshop, it's a one-day event. So we'll start with the theories and more elaboration, and we'll cover many practical things. Then in the afternoon, you will follow up with simulation games. That means you exactly understand what we cover in the morning. So now for this year itself, we only start in KL. Next year, there's a possibility that we are going to move into major cities like Penang and JB, but we yet to finalize yet. So now for this BMW series, at this moment, we already cover the first session. It's a full events, fully signed out events, and the second session this Saturday is also fully signed out. Now, today we are not going to open for any registration. I'm so sorry. The reason behind is seriously we have a very long waiting list and we cannot accommodate any more. So what we can do is, you remember about this BMW series. Next year we are going to repeat the same series from January to somewhere in March. So if you cannot get into this year's workshop, you just try to register for next year. So we have another session this Saturday, followed with futures trading plans on 18th of November and risk management for futures trading on 25th November. We are going to cover those topics that's very important. Now, for those who do not know, Bursa Marketplace, you can get these all events. You go to Bursa Marketplace, then you click into Happenings Marketplace, then you can see all the things. This is all topics that we are going to cover during our workshop 2, which is this Saturday. And just the last part is the next topic for webinar. Webinar and Bursa Malaysia workshop, they are two different things. Webinar is basically online, and Bursa Malaysia workshop is a physical seminars. So the next topic will be risk management for futures, will be covered by CC Yong, and the date will be 16th of November. It's a Thursday. The same time will be 8:30 to 10 o'clock. And for registration, this is the link for you to register. Later, Chun Sian will put up the registration link for you all to register as well. Now, this comes to the end for my presentation. My usual quote is, just remember, successful trading starts with good trading habits. And this go in tandem with our today topics, which is you need to have a proper trading plans and just follow your trading plans. You inculcate a good trading habits, eventually you'll be very successful. Now, for those who know, I keep on repeating, please don't add me friends through my Facebook. You just follow through Facebook. We have upcoming all the events we will highlight as well. You just type exactly as per my name, then you can follow my Facebook. Please don't send friend requests. Thank you very much. This is the end of my presentation, and this book, you can get it in any of the bookstore. If you are beginners, this is very good books for you to start, because this book, when we launch it in less than 1 year, you already clinched a national best-selling title. So you can get it in any of the bookstore, MPH, Kinokuniya, Popular, any of the bookstores that you can name it. So thank you very much, and I pass it back to Chun Sian.
Yes, thank you, Ty'ng Ty'ng. Well, that was a very excellent sharing on the very limited time that we have. So now we are opening for Q&A, and I'm seeing a lot of questions here. The first thing is, let me see the first question. Now, for a tiny movement for KLCI, like in these 2 days, how do we earn or how do we trade and make money from FKLI?
Oh, very good question. Now, today's session, all your questions need to be answered, because basically for this webinar series, today is my last class for this webinar. So subsequently, I will not cover anymore. Now, generally, for you to trade, if you go back to the trading plans that just now I covered, firstly, you need to identify whether you are short-term traders or you are long-term traders. Now, if you are long-term traders, for example, definitely you should not go for short-term trading. Like if these 2 days is a tight range trading, very tight range trading, less than 10 points, then generally you will not profit from the market itself, and you should not trade. You just stay on sideline. Now, I need to highlight one thing. Many of us thought that when you trade, you need to trade every day, every hours, or every minutes. When you don't trade, a day that you don't trade, you find that you're something wrong, or you find that you're very itchy, your hand is very itchy, or you find something wrong. This is not true. Actually, for you to profit, you don't need to trade every day. I do have graduates that 1 year they might trade 2 to 3 times only, but they are making huge profit as well. Trust me, you don't need to do a lot of tradings to enable you to have huge profit. Quantity doesn't equals to quality. So when the market doesn't allow you to trade, you don't trade. So it comes back to the question or your trading plans that you have designed. If you already decide that you fall under the category of long-term trading, this 2 days market, which your question is, if are very short-term or very tight range trading, just don't trade. You just stay at the sidelines. When the opportunity comes, then only you trade. If you define yourself as short-term tradings, these 2 days, the range is very obvious. Means that you can buy at the support, you just sell at the resistance. Again, you buy at the support, then you sell at the resistance. You still can make profit. So it goes back to your trading plan itself.
Okay. The next question is it every month the contract fee is different?
Okay, I try to clarify one thing. Your fees here means that is your commission, right? For the previous session, if you go back to revisit the previous session, we did cover the commission, the transaction fees. Now, all the transaction fees, they are the same. That means when your brokers charge it to you, it is a standard or absolute figures. For example, you trade one contract, if the brokers charge you Ringgit Malaysia 15, means that every contract that you buy or every contract that you sell, you just need to pay the Ringgit Malaysia 15 plus GST. That's it. It is an absolute figures. Unlike stocks is based on percentage. Based on your portfolio or your shares values, they calculate your transaction fees. But for futures, it's absolute figures. So generally, regardless you trade this month, next month, or the following month, or even you are trading for August, September, or you're trading at 1007 or 1008 or 1009 or 2000, regardless, these all the transaction fees will be the same, which is an absolute figures.
Okay, excellent. So the next question is, I think, on rollover. Now, how to get the same price for legging to avoid slippage?
Sorry, the question is?
How do we get the same price for legging? I think one of the methods for rollover is legging, right?
Oh,
to avoid
okay.
slippage. Yeah.
Now, to be honest, there is no specific ways for you to avoid slippage, because sometimes by the end of the month, that means the August and September price is a huge difference. But you can minimize it. Firstly, how to minimize it? Minimize your slippage. First thing is try to avoid to roll over on the last day itself. I repeat, try to avoid rolling over on the last day, especially on the last day second session. So this would in a way reduce the slippage. So if you roll over a day before the final trading day, for example 29th of August instead of 30th of August, then you will minimize your slippage. You go and monitor the current market. If you try to monitor, today is 26, tomorrow is 27, next week the last trading day is next week. These few days, the 2 months, it means that your September and your October and November is not much of difference. It can be exactly the price, or sometimes the difference is only 0.5 to 1 points. So you try to avoid on the last day to roll over, then your slippage will be minimized. So the first thing that I would encourage you to do is try to avoid the last day. That means if you decided that you're going to hold the contracts for the following month, you just roll a day before that or 2 days before that. Now, institutional clients on average, they roll 1 week prior to that because their position is big. They will need to start to roll over. But as a retailers, normally you just need to roll a day before or the same day in the morning. Try to avoid the afternoon session. Normally, if you roll over in the afternoon session on the last trading days, your slippage will be a lot.
I see. Now, for a beginner, do you think it's better to trade FKI or FCPO?
I think this question being raised before. Now, for beginners, I always encourage you at least to test the water when it comes to like trading plan this, or just start with FKI, because FKI first thing is some things that you are more familiar. First question is because you're more familiar, because you know FBM KI. You've been trading FBM KLCI, the stocks itself, for many years, or even started with at least 1 year. You're more familiar with FKI. So you will know that what will impact your FBM KLCI. For example, this Friday, the budget, tomorrow, the budget itself, it might have certain impacts. That's why you can see that the market is not moving anyway for this week itself. Now, second part is you go with FBM KLCI, the volatility is less compared to FCPO. Now, FCPO volatility on average is way higher than FBM KLCI. So as a beginners, personally, I will encourage you to test your water with FKLI. But my advice to you all is eventually try to pick up FCPO as soon as possible, because sometimes volatility is good. Only volatility will allow you to make huge profit. That is the reason why for me, as a beginner, you start with FBM KLCI to understand the market first. You understand the volatility, you understand, you test your strategy as well. Then you must start to move into FCPO. Because FKI, the volatility is low, it also represents that your profit relatively will be lesser compared to if you're going for FCPO. So I repeat, for beginners, personally, I will advise you to start with FBM KLCI because of two main reasons. One is familiarity. That means you're more familiar with FBM KLCI. Second, your FKLI, the volatility is less compared to CPO.
I see. So the next question is scalping. Okay. Now to get 5 points scalping for FCPO, what is the usual risk to reward ratio?
This is a very, very good question. Generally, frankly speaking, personally, I don't encourage people to go for short-term trading. If you generate history data, because we do a lot of R&D. When we decided to go into a market, we do a lot of R&D. That means, for example, we already have history of production figures, all the export data, etc. We even have all the volatility in place. We already calculated all the data. If you really understand historically, the volatility for intraday high and low for FCPO generally is not really what allows you to go for intraday trading. That means if you're going for intraday trading, the chances or the tendency for you to suffer losses is relatively high. Trust me. Provided you're already very familiar with the market itself. That means you're already long in the market, you have more than 5 years, 10 years of experience, you know exactly how to trade, and you are a big trader. If your capital is not big enough, personally, I don't encourage you to go with that. Now, if you go with 5 points, this is the good question that you already asked. Now, if you go with 5 points, the question that you already asked is how to go with the risk and reward. Now, if we go back to the minimum requirement of risk and reward, which is 1 to 2, your 5 points means that if your 5 points is your profit, minimum, you need to cut your losses at least at 2.5 points. You know, if you are trading in futures market, or if you already started in CPO, you should know the volatility means that the movement for 2.5 points is so common. Most of the time, the market up and down, 2.5 points is too common. That means in one day, the movement of 2.5 points is generally all the time. So your stop loss will easily be hit. So my personal advice to you is, if you insisted to go for intraday trading, you might need to go for at least a profit of 20 or 30 points. Then it is more justifiable for you to set your stop loss at 1 to 2 ratio, risk and reward ratio. So if you are going to profit of 5 points, my personal, so far based on so many years of experience, and we see so many institutional and retail trading, I can say eventually the chances for you to make money is very, very low.
I see. So the next question is on journal. Like, which format of journal record is suitable for beginner and intermediate level trader?
For beginners or intermediate, 2 things. One thing is when you define yourself, remember the 4 elements in the trading plan. First part is yourself, second part is entry level, the part is exit level, and the final part is risk and money management. Now, first part, yourself, you can define in words. Or else you can just define in the Excel spreadsheet, is okay as well, because Excel spreadsheet you can type wording as well. Now, second part entry and the third part exit level and the final part risk and money management, you just set up in Excel spreadsheet to do. That means you remember there's one Excel spreadsheet that I show example just now during my presentation. You just follow that. Or else you go to Google, you just type it. You just type, for example, trading plan or Excel spreadsheet or trading journals. There are a lot of free examples for you to download. So for beginners or intermediate traders, my personal advice is you can just start it as simple as Excel spreadsheet. Excel spreadsheet, to be honest, as a retail investor, is more than enough. You don't need to go for more comprehensive or more complicated trading flow.
Okay. Now, the next question is in regards to spread trading. Now, because the previous speaker mentioned that a trade with direction is difficult, as we cannot predict the trend. Thus, he suggests that spread trading is better. So for beginner, can we rely on technical analysis to predict trend?
Yes. Now, okay, different speakers, we have different stance. It comes to different ways of doing things as well. For example, the markets that they are focused, the products that they are focusing as well, their experience, their views towards the market, etc. Now, I wouldn't say that, no, as I mentioned, because every speakers have their own ways of doing the trading, etc. Personally, I'm already involved in the futures market for more than 10 years. We have seen many cases and we have our own funds, etc. So we know exactly how to do. Now, why we don't encourage people, especially beginners, to go with spread tradings, the reason behind is, spread tradings, you cannot go with fundamental analysis. You cannot go with technical analysis. It relies a lot in terms of news. And as I mentioned to you, as a retailer, it's very difficult for you to get news instantaneously. That means when the news release in the market, you're getting the second-hand or third-hand news already. It's very slow. That means you are lag in the market. You are slow in getting the information. That's the reason why if you go with spread trading, how are you going to use technical to trade? There's no range for you to guide you through. There's no technical indicators that you can follow. There's a reason why personally I don't encourage. But one of the reasons why he's encouraging, or the previous speaker is encouraging, is because spread, the margin required is relatively low. So it goes back to your objective. When you go for trading, are you going to have lower trading capital, or your objective is to make money? If your objective is to make money, sometimes the volatility itself is good. So you need to understand your trading plan. You need to understand your objective as well. Personally, for us, we know our objective very well. We want to profit as much as possible. That's why directional trading is our priority. So when you go for directional trading, your technical analysis will guide you through, definitely. But if you go for spread trading, there's no technical that you can follow. So when you go for directional trading, for example, you can see at least it's uptrend, you go and long. If it's a downtrend, then you go and short. So at least during an uptrend, you don't go and short. When you go against the market, it's very difficult for you to make money.
That is interesting perspective as opposed to the previous speaker. But anyway, yeah, as Ty'ng Ty'ng has suggested, different speaker has different strategy. So well, you pick the one that is right for you. So the next question is, can we buy or sell options on the futures to hedge against futures? If yes, how?
Okay, now generally I would say yes, but in Malaysia market, I would say no, based on Malaysian market, because today's session is brought by Bursa Malaysia Derivatives, so we need to focus in terms of Malaysian market. In Malaysian market, the answer is no, because there's no liquidity in terms of the option. So you just forget about it, because this is not something that you can do it in Malaysia.
Okay, so now the next question is on long-term trading. Now, long-term trading will face bigger stop loss because of market volatility compared with the short-term trading. Is that true?
Long-term trading, you will tends to face with higher stop loss. That's the question, right?
Yeah, a bigger stop loss. Is it long-term trading will have bigger
Yes.
stop loss?
Generally, yes, because when you go for long-term trading, you're expecting a higher profit. For example, based on last year market condition, our profit can be, for example, for CPO, it can be 150, 200, or even 300 points before we take profit. So when you have a huge profit, it means that when you calculate your stop loss, if let's say you go with 1 to 2 lah, for example, your risk 1, your reward is 2, for example. Now, if you have a 200 of profit, so basically you can have 100 points of losses. So I would say that if you go for long-term trading, you're expecting a higher profit. That's why, in a way, it will generate or define or translate your losses can be higher as well.
Okay. So the following questions is on the difference between. Can you explain the difference between trading structured warrants, call or put warrants, and compare it with trading futures like KLCI, FKLI?
Okay, now structured warrants doesn't fall under Bursa Malaysia derivative. It actually fall under stocks. Now, for futures, it's fall under Bursa Malaysia derivative itself. That means it's under derivative products. Now, different people, if you ask me, definitely if you go and ask the speakers when they talk about structured warrants, definitely they will say about the structured warrants benefit. And as I'm a futures speaker, definitely I would tell you the benefit of futures trading. Now, you can do a comparison. For example, I'll give you an idea. When you go for structured warrants, let's say you go for put warrants, let's say for your FBM KLCI instead of your short for FKLI. Now, the difference is when you go for structured warrants itself, at the point that you enter, basically you are in a losing position. You know why? Because structured warrants, in terms of warrants itself, there's one thing called time decay. One of the part that they calculate the cost, whether what price that they are going to give it to you, those market makers, they already take into consideration of time decay. So by the time that you enter, in a way, the time decay already put you in a losing position. That's why it's very difficult. When it comes to structured warrants, and you understand one thing is, the prices given by the market makers itself. That's why if you ask me, futures itself is more direct. It depends on individual preference. I'm not going to go against anything about the stocks market, but I'm saying that it depends on individual preference. Personally, for me, if I'm going to hedge, I will go with some things like FKI itself because it's more direct and less thing for me to take into consideration and less thing for me to calculate. Because like for example, you go for structural warrants, there's another issue. Sometimes the liquidity is not sufficient. That's another problem for you as well. But FKI, you understand that in Malaysian market, liquidity is not an issue.
Okay. Now the last question is on your events. Okay. Can we register for 18 November and 25th November event already with the BMW series?
I'm so sorry. I just need to highlight one thing. For the upcoming 3 workshop, right, is fully signed out. So there's no way for us to accommodate. Even some of the participants who are already registered, they actually approach us telling us that they are going to bring along their spouse, etc. But we can only do one thing, is to turn down, because our waiting list is really very long. There's a reason why Bursa Malaysia decided that next year they are going to continue with this series of Bursa Malaysia workshop. They are going to start for another batch. So you can look forward for next year for another session. So from there, you can do a registration. And my personal advice to you is try to register as soon as possible. Because historically, for the previous 2 registration, when we opened, in less than a week already fully taken out. So for those who are going to come for the upcoming workshop 3 and 4, I can only say sorry to you because we really cannot accommodate anymore.
I see. All right. So thank you so much. We have come to the end of the webinar for futures trading plan, and thank you so much for your spending your time with us today, and Ty'ng Ty'ng, and thank you everybody for spending your time here to learn about how you can structure your own futures trading plan. I'm sure after this session you'll be able to structure or customize or create your own trading plan that's suitable for you, be it in outright trading or be it in position trading, scalping, or be in spread trading, which we'll cover in the subsequent event. So in the next session, we have our webinar number 5, risk management, whereby we will delve in depth on how we can manage your risk even better. So this whole session is dedicated to talking about risk management. It will be done by our next speaker, CC Yong, and I have sent in the registration link in the chat box. Please register. Please register for the webinar number 5, risk management for futures, using the link that I sent over on the chat box. With that, thank you everybody for attending our webinar number 4, and wish you have a pleasant evening. Thank you, Ty'ng Ty'ng.
Thank you very much. Thank you, Chun Sian.
Bye bye.